Hello and welcome to the Newsmax broadcast of Meltdown on Main Street. My name is Craig Stepp, and today we're going to discuss the most serious financial epidemic since the Great Depression. I'm talking about the rapid extinction of the American middle class, a social and economic catastrophe that has almost certainly impacted your ability to achieve the prosperity you deserve. Now, as you know, the first decade of the 21st century is now behind us. And while it delivered great wealth to a select few, the last 10 years have been a lost decade for the average American family. As I am speaking with you today, the U.S. stock market is 20% lower than it was 10 years ago. And when you add up the wealth that was destroyed by the dot-com crash, the housing bubble, and now the Great Recession, independent investigations reveal that the U.S. households have lost more than $25 trillion over the last 10 years. That's more than $85,000 for every man, woman, and child in this country. The baby boomers alone have lost more than a quarter of their collective net worth. Even the wages that U.S. workers earn at their jobs are declining. And with less money in our pockets, the American family is faced with rising prices everywhere we turn. Since 2000, health insurance is up 69%. College tuition has doubled. Food prices are near all-time highs, and now it costs 48% more to fill up your tank. The very foundation of the American dream is that we become wealthier and more secure as the years go by, but instead we are falling behind. And unfortunately, the next lost decade has already begun. Economists from Goldman Sachs suggest we're heading for the Great Stagnation. Billionaire Bill Gross calls it the new normal. But whatever you want to call it, what it means is that the next 10 years are likely to be a lot like the previous ones. That's why you need guidance, to avoid the crippling financial effects of yet another lost decade. And that is why we have convened this important discussion. In a few minutes, I'm going to introduce two very important guests. Joining me today will be New York Times best-selling author and critically acclaimed economist Bob Wiedemer. Bob was one of the very few voices who accurately predicted the chain reaction of financial bubbles, which caused America and the entire world's economic meltdown. You don't want to miss his predictions about the economy and the markets and how you can stay safe from what lies ahead. You're also going to meet investment strategist Tom Hutchinson. Tom is a financial insider who spent years working for some of the biggest firms on Wall Street, managing millions of dollars and helping hundreds of American families to grow wealthier. Today, you're going to discover why our wealth is disappearing, how we can stop it, and what the future holds. Whether you're currently retired or still working, our esteemed panel will also reveal specific strategies and investments you can implement immediately to ensure that the next 10 years are the most prosperous of your life. But before we get to the step-by-step solutions you can use to restore your wealth, we have an eye-opening surprise for you. Newsmax has filmed a never-before-aired mini-documentary that tells the story of America's golden age of prosperity. The following video reveals how the American middle class became our nation's engine of growth and why it's dying right before our eyes. If the American people have any hope of returning to an era of prosperity, it's critical that we understand where we came from and how we got in the position we are in today. As a viewer of Meltdown on Main Street, you will be among the first people to see this powerful footage. Afterwards, we'll come back for an important discussion with Mr. Wiedemer and Mr. Hutchinson. So now, without further delay, Newsmax is proud to present the golden age of prosperity, the story of America's vanishing middle class.
For the longest time, when people told the story of America, they described a nation that did not falter. We did not back down, and we conquered even the most tremendous hardships. During the Great Depression, we were hungry, our clothes were ragged, and we did back-breaking work for starvation wages, if we could find any work at all. Proud fathers stood in bread lines for hours and waited for watered-down meals at soup kitchens just to feed their families. But neighbors reached out to neighbors, and we helped each other through those hard times. We kept our dignity and fighting spirit and showed the world that we are a resilient nation of strivers and survivors. When World War II arrived, America didn't cower as an evil tyrant threatened to take over the world. We heard the call to arms and proved that the United States could be counted on to defend the freedom and safety that all people deserve. And as our young men bravely fought to protect the ideals of democracy, 6 million American women took on the nation's hardest jobs in manufacturing and production. These women showed that patriotism is not only displayed on the battlefield, it can also mean punching a time clock to provide for loved ones. When the war was over, it was time for our soldiers to get back to work, to enjoy life, and start a family. And start a family we did, as 75 million new Americans were born during what became known as the baby boom. This was the beginning of America's golden age, an era of prosperity and development that would change the world. It was a time when our government was truly of, by, and for the people. In 1944, Congress passed the Montgomery GI Bill to help U.S. veterans re-enter the job market. The GI Bill allowed millions of young people to become doctors, engineers, farmers, and business owners. And in the span of just a few years, nearly 2/3 of Americans entered the middle class, achieving prosperity through hard work, ingenuity, and a never-quit attitude. During the 1950s, the U.S. economy doubled, and then doubled again in the 1960s. The American dream was alive and well, and for millions, this dream was fulfilled when they left the hustle and bustle of the city and put down roots in the clean and safe suburbs. With the average cost of a new house just $9,500 in 1955, even a middle-class family could afford a spacious new home with a modern kitchen, all the amenities, and of course, a white picket fence around the yard. And we didn't need two parents working to make ends meet. Dad had a secure job, and Mom was waiting when the kids got home from school. Summers in the suburbs were filled with barbecues, bike rides, baseball games, and visits to the pool. It was a time when service stations actually provided service, when 5 and dime stores really sold things for 5 and 10 cents, and when all you needed was a nickel to mail 1 letter and 2 postcards. It was also a time of great achievements in manufacturing, technology, medicine, and science. It was American engineers who paved the way for all modern electronics when they developed the transistor, the integrated circuit, and the first digital computer. It was also an American company, RCA, that produced the first commercial color television in 1954. Now, instead of listening for the crack of the bat over the radio, we could watch the ball fly out of the park and see Mickey Mantle rounding the bases in living color. And we could swing our hips and sing along with our favorite performers. It was an American researcher, Jonas Salk, who developed the polio vaccine in 1952, a discovery which effectively eliminated a disease which had killed or crippled millions, including former President Franklin D. Roosevelt. The car industry also began to flourish during this time, with General Motors, Ford, and Chrysler leading the way. With the average cost of a new Ford less than $2,500, millions of middle-class Americans could afford their own transportation. If you had a little more scratch, you could buy a Corvette or new Cadillac for less than $5,000. And it didn't cost that much to fill up the tank, because gas was just 25 cents a gallon. During the Great Depression, even the smallest indulgences were a luxury. And yet by the end of the 1950s, most American families owned a car, a television, a refrigerator, and their own home. It was a time when the majority of those in Congress were committed to honoring the Constitution, representing the people, and putting our money to good use. The interstate highway system was a product of this period, allowing workers and families to spread out across our great country and helping us easily visit friends and loved ones whenever we wanted. American ingenuity won the space race and put a man on the moon.
It's one small step for man, one giant leap for mankind.
And as our national prosperity continued to grow, the American dream granted us a roadmap to an early, comfortable retirement. And as our excellence propelled us through the years, we thought the good times would last forever. As the 80s turned into the 90s, we watched the stock market rise and our home values soar. Then, right when we had it all, the world turned upside down. The American dream became a mirage and vanished. In less than a decade, the hopes of an entire generation, what many have called the greatest generation, came crashing down. The trouble began as the dot-com collapse erased $7 trillion from the stock market and decimated the retirement accounts of millions. Then, just as it seemed we were on the road to recovery, a perfect storm of economic disasters hit the country and the world. The bursting of the housing bubble wiped out $7.4 trillion in equity, taking with it half the net worth of the American middle class. As the Great Recession began, the U.S. stock markets plunged 40% in 2008, and trillions more disappeared from American retirement accounts. During the golden era of America's middle class, Detroit, Michigan was the magnificent center of the automotive universe. Today, in a symbolic twist of fate, it looks like a war zone. The American middle class was our nation's engine of growth for half a century. Even blue-collar workers had the opportunity to retire in comfort, with pensions that were fully funded just as promised. Yet today, instead of experiencing the leisure and security we planned for our golden years, 75% of the American middle class expect to work through their retirement. And with unemployment reaching epidemic levels, not even that is a sure thing. The economy has lost 8.7 million jobs since the Great Recession began, and those who can get work are making less money. It's no surprise that the confidence and optimism Americans took for granted has been replaced with pessimism and doubts about the future. So what caused the American dream to crumble? Politicians in Washington, D.C. don't seem to know, and that's because America is not found in the marble buildings along the Potomac. It is not found on Wall Street either. America is made up of those who build, teach, heal, grow, manufacture, and raise a family. It is found in the homes and hearts of 307 million Americans. People like you helped build America and make it great. But the comfortable retirement many dreamed of has been stolen. The America we know and love is not coming back. The actions you take from this moment forward can be the difference between feast or famine, between ensuring that your golden years are safe and sound, or uncertain and unstable, and between giving your children and grandchildren the future they deserve, or adding even more challenges to their road ahead. The choice is yours, but you must act.
What you just saw is a powerful reminder of how great and prosperous our nation once was, and how far we have fallen. The last 10 years have been difficult for the average American family. Retirement plans have been decimated and there is little time to make up lost ground. It's understandable if you're nervous about the economy and worried for you and your family's financial future. But as scary as things appear, you are about to learn that we still live in an age of unprecedented opportunity, if only you know where to look. Joining me now are two men who are confident and optimistic that although rough times lie ahead for our nation, prosperity and security await those who are prepared. With me in the studio is Tom Hutchinson. Tom is an investment strategist who has spent over a quarter of a century in the financial trenches, from the back offices of some of Wall Street's biggest firms to the floor of the New York Mercantile Exchange. To the time he spent meeting with thousands of investors and managing millions of dollars, he has seen and done it all. Tom, thank you for joining our broadcast.
It's a pleasure to be here, Craig.
Also joining us via satellite from Washington, D.C. is Bob Wiedemer. Many of you may know him as the co-author of America's Bubble Economy and the New York Times best-selling book, Aftershock. Bob was one of the very few economists to predict publicly and well in advance what kind of trouble America was headed for when the easy money party came to an end. He laid out a clear warning about a chain reaction of crashes, which began as the real estate market crumbled and the stock market collapsed, followed by the private debt fiasco and the implosion of consumer spending. Unfortunately, Bob was right on all his predictions, and Americans are still struggling to rebuild their lives in the aftermath. Today, Bob is predicting that two more bubbles, the US dollar and government debt, will pop in the years ahead, and the consequences will topple our economy. With these dangerous fiscal threats approaching, Bob Wiedemer now works tirelessly with individuals and businesses to develop plans for protecting their wealth and prospering even in the most difficult times. Bob Wiedemer, thank you for being here.
Well, thank you, Craig, and I'm happy to join you and Tom today.
Gentlemen, we have a very comprehensive and important discussion ahead of us. We're going to talk about the national debt, inflation, and the dying dollar, and what impact this will have on our viewers and their families in the days and years ahead. We're going to reveal exactly how the ultra-wealthy have continued to prosper, even as the American middle class is vanishing before our eyes. We will also discuss how folks on Main Street can use the same tactics and secrets of the rich to aggressively grow their wealth and outpace any coming economic threats. We're going to show our viewers specific ways to generate cash payouts of 20, 30, even 50% annually from their retirement savings without ever dipping into or reducing their nest egg. We're even going to discuss an investment that outperforms gold and silver during times of inflation and could provide you with thousands, even tens of thousands of dollars in income in the years ahead. But first, I'd like to let our viewers know something very important. Tom Hutchison has created a powerful financial resource to help average Americans reclaim their financial security. It's called the Middle Class Survival Package, and it includes the brand new full-featured DVD presentation, Fortified Income Strategies, and Tom's new book, Powerful Secrets to Achieve Superior Returns. This comprehensive package reveals dozens of specific recommendations to generate a constant stream of cash starting today, plus practical guidance for managing your investments, taxes, and personal finances. It doesn't matter if you're simply looking to protect the money you have and create more wealth over time, or if you need to generate a substantial stream of cash to live on today. You're going to get the answers you need. And Newsmax is prepared to send this powerful resource to the first 1,000 viewers who respond today. To claim your copy, click the button on your screen. Now, this will not interrupt this broadcast. It will simply open a new window. So let's get this discussion underway by answering the question posed in the documentary we just watched. Bob, what caused the American dream to crumble? And why is the middle class dying in this country?
Well, you have to look back in history. We might have been feeling the effects just for the last 10 years, but there's a problem that's been brewing for 40 years. It didn't strike us overnight. What happened is that the American economy was growing very rapidly in the 1950s and 1960s, but the government was growing even faster. Now, you might recall that we were on the international gold standard at that time, but the politicians and the bankers, they didn't like that. It restrained them from creating money out of thin air and racking up debt for the programs of big government. So in 1971, President Nixon broke America's solemn promise to the world. He ended the international gold standard. From that point on, the dollar became an I owe you nothing, and government debt began to skyrocket. Now there was no war we couldn't finance, no social program was too expensive, and just about every pork barrel project got its funding. You can clearly see the effects of this as the dollar has lost about 82% of its purchasing power since 1970. It was the beginning of the end for the American middle class.
Tom, can you expand on Bob's point?
Well, Bob's right. The earnings of the average American family have basically flatlined since the early 1970s, despite the fact that there are more two-income households than ever before. In fact, when you adjust for inflation, the average man makes 27% less than he did in 1968. That means sons are making less than their fathers did at the same age. The very foundation of the American dream is that each generation will go on to live a better life than the last. And that's how it was in this country for a long time. But when you account for debt and inflation, the American middle class has been falling behind for the last 40 years.
But production levels and profits have exploded during that time. So where did all that wealth go?
The vast majority of it went to a very small segment of the population, about 1%. According to Federal Reserve data, the wealthiest 1% of Americans now have a greater net worth than the bottom 90% combined, and the disparity is growing wider. Since 1979, the average income of the top 1% has increased 275%, while average overall wages are basically unchanged. In the last 10 years, the trend has accelerated even more. Between 2002 and 2006, An astounding 75% of all economic growth was captured by the top 1% of income earners. And while the average 401k lost 25% between 2008 and 2009, the wealthiest 400 Americans became $30 billion richer. And let me be clear, this disparity in wealth is not because the middle class was less productive. In fact, due to better technology, higher education, and lots of hard work, the productivity and output of the American people has been rising steadily since the 1940s. But since about 1971, the average American family has seen almost no benefit from their own rising productivity. As inflation went up faster than wages, we started saving less and borrowing more.
So, Bob, besides the social implications, this seems like a bad thing for the long-term health of the economy.
Well, you're right. In fact, it could destroy the economy. The gap between the top 1% and everyone else hasn't been this great since the 1920s. And I think you know what happened right after that. We need the middle class. The American middle class is our nation's engine of growth. Economies become dangerously unstable when all the wealth skews to one side.
So, Tom, I know that a lot of people viewing this broadcast are already of retirement age or they're very close to it. So let me ask you, what does the retirement picture look like for the average American on Main Street?
Well, Craig, I wish I had some good news for you, but I don't. The outlook for American retirement is grim. I reviewed a recent study that showed nearly half the working class has less than $10,000 saved. Now, that study included everybody from retirees to people in their 30s and even younger, so the numbers are a bit skewed. But if you dig deeper, you'll find that the same thing is true for those even closer to retirement. There was a separate study conducted by Wells Fargo which found that the average person in their 50s has only $29,000 in retirement savings. So whether it's $10,000 or $29,000, that's really a dangerous place to be. Look at it this way. Warren Buffett recently said that he expects the stock market to return about 5% a year for the foreseeable future. But let's say you double Buffett's estimate and make it 10%. For somebody investing on their own, that's a tough mark to hit year in and year out. But let's say you do make 10%. With $29,000 saved up, that's still less than $250 a month. That may cover your electric bill and buy a bag of groceries, but it's not enough to live on. Especially when you consider that safety nets like Social Security might not be there for us to count on.
Well, Tom, I'm going to guess that many of our viewers feel like they have a lot of catching up to do in order to comfortably retire. So are you saying that there's no hope for those who only have a small nest egg today?
That's going to be a yes and no answer. So let me start with the bad news. The overall stock market was down 20% over the last decade, so a lot of people are fearful. They're playing it safe and holding cash. But that's not nearly as safe as it appears. If you held your money in cash over the last 10 years, you would have lost 35% of your wealth. And this is a trend I absolutely see continuing in the years ahead. So for those who follow the herd and invest the way most people do, the answer is yes. Hope will be in short supply. Investors who stick to the old rules are facing an uphill battle and they're not going to win. You have to think outside the box to get ahead these days. Fortunately, for those who know where to look, the opportunities to create wealth have almost never been greater than they are today. It's not much different than what happened during the Great Depression. Times were tough, but there were more American millionaires that were a product of that period than any other time in history. So in that regard, there's a great deal of hope and opportunity for those with limited funds and want to quickly accelerate their retirement savings.
Bob, you're a world-recognized expert on the economy, and especially on matters of inflation, the dollar, and government debt. What's your outlook for the years ahead?
Well, first of all, Tom is right. And all those investors flocking to so-called safe investments like U.S. Treasuries are going to be in for a rude awakening. For one thing, returns are so low, they're insulting. 10-year Treasuries are paying around 2%. At that rate, it would take 50 years to double your money. But the real risk is inflation, and my outlook is that it's getting much worse. In fact, I foresee a situation where we could experience 100% annual inflation for 3 years in a row. We'll start to see it get worse in 2012, and then by 2013, we'll be knee-deep in it. When that happens, the traditional safe havens won't feel safe at all. Any long-term investments that pay a fixed income will get crushed.
So, do you have any hope that Washington can turn things around?
Not at all. You'll hear a lot of talk from Washington about a strong dollar, but all the while, the printing presses will be running on overdrive to recapitalize the financial system, support the economy, and pay for more government debt. Let me put it in perspective. From the founding of our republic in 1776 until 2001, the U.S. national debt had grown to $5.8 trillion. Now that's a lot of money. But in the last 10 years, that figure has grown astronomically. The official debt today is nearly $15 trillion. But that doesn't include what we owe for entitlement programs like Social Security, Medicaid, Medicare, and veterans benefits. When you add it all up, the total U.S. debt is more than $100 trillion. And those aren't my words. That number comes from Richard Fisher, the president of the Dallas Federal Reserve. And it won't matter who's in charge in Washington as those obligations come due. The knee-jerk reaction of the Fed, White House, and Congress will always be to pay those insurmountable debts with the printing press. This will obviously destroy any value the dollar has left. But it won't be a catastrophe for everyone. Those who make a few simple decisions can stay safe.
I guess the only good news is that we're in a critical window where you still have time to prepare. A little later, we'll discuss specific tips for your investments, taxes, and personal finances to help you stay one step ahead of these fiscal dangers bearing down on America. And remember, below this broadcast, there is a very powerful middle-class survival package, which includes Tom's brand new book and recently recorded full-featured DVD presentation, available to the first 1,000 people who respond today. So Tom, we know the deck is stacked against the average family on Main Street. What do you suggest for someone who needs to protect the money they have now and play catch-up as quickly as possible?
The American dream is about writing your own success story, and it's never too late to get started. The first step is that you have to think like a wealthy person. Let me explain that a little bit. The ultra-rich are not smarter than everyone else, but they do have a very different methodology for achieving, growing, and protecting wealth, and it's obviously working.
So how have they done it? And how do they continue to prosper even when times are tough?
Well, the first difference is that the average person works for wages. And as you know, wages have been flat for 40 years. That's no way to get ahead. But that's not how the wealthy operate. They don't settle for wages. They establish ownership and take a percentage of profits. Consider the difference. Even during the lost decade we just endured, corporate profits are up 210%. Now compare that to household income, which is down 7%. Now, it's obviously not practical or possible for everyone to start a business, but you can become an owner and take a percentage of profits by acquiring stocks. And I suggest you target the same kind of companies favored by the ultra wealthy.
So the wealthy also invest differently than the average person.
Absolutely. After meeting with literally thousands of middle-class investors, I discovered that most of them spend their time chasing the next hot play. They want to get in on the ground floor of a company like Microsoft before it's the Microsoft we know, and then sit back and watch $5,000 turn into $1 million. But the wealthy have a completely different mindset. They're already rich, so they're not trying to turn $5,000 into $1 million. Their only focus is on protecting what they have and getting paid. The average millionaire thinks about dividends and income before they ever think about capital gains. And it makes all the difference in the world.
Bob, you've been listening to Tom, and I know that you've been working with investors and companies to help them manage their money for the coming crises you see unfolding. Have you seen the same patterns in terms of how the wealthy invest?
Well, here's my take, and this is what I tell people that I advise. We are not out of the woods by any means. We're going to see a massive spike in unemployment in the years ahead and a pullback in real estate. I get a lot of flack for this in the press, but I believe in an extreme scenario, we could see 50% unemployment and a housing crisis that makes our current situation look like a picnic. So if you're looking to keep your nest egg safe and provide your family with a high level of income, you need to do what has already been proven to work when times get tough. Just like the wealthy, you need to focus on companies that pay you cash for being an investor.
Tom, it sounds like the markets could be very difficult to navigate, but you're a long-term veteran. In a market like we're in today, what's the track record like for the companies you target?
I don't worry at all about down markets. In fact, many of the companies I recommend actually benefit when times are tough. And history has clearly proven that income-generating investments are the place to be. Over the last 130 years, including the Great Depression and the stagflation of the late 1970s, dividends provided over 50% of the total return of stocks. But that's if you just pocket the dividends. If you take that income and put it right back into the markets, the picture is even clearer on how important dividends are to your net worth. Wharton School economist Dr. Jeremy Siegel did some great research showing that reinvested dividends have accounted for 97% of all the money made on the S&P 500. That means only 3% has come from capital gains. I think it's obvious where you ought to focus your attention if you want to protect your wealth in the future and set yourself up for retirement.
Well, let me add to Tom's point. Many people are worried that the stock market is beginning another lost decade. So let's look at the last lost decade, which ended last year. Between 2000 and 2010, stocks in the S&P 500 that did not pay dividends fell by 58%. And yet during the same time, the dividend aristocrats of the S&P 500 were up 119%. That's the difference between losing more than half your money or more than doubling your retirement nest egg. And the same thing was true during the lost decade of the 1970s. From the end of 1972 through 1982, the Dow Jones Industrial Average gained just 4%. However, when you factor in reinvested dividends, the return was 66%. Or consider the dot-com bust. Stocks that paid dividends actually rose 10.4%, and that was during a crash.
So let's talk about the most well-known of these wealthy investors. Now, how is Warren Buffett able to generate dividend payments that are almost 14 times larger than what you or I could get today?
That's a great question. You're referring to his position in Coca-Cola. When most people think of dividend stocks, they don't look at the full picture. They see the 2.8% yield that Coca-Cola pays right now, and it doesn't look much different than the returns on treasury bonds. But that's not what the wealthy see when they look at a company like this. In fact, Warren Buffett today is making an annual yield of almost 40% on its shares of Coca-Cola. And that has nothing to do with reinvesting dividends. It is entirely the result of Coca-Cola growing its dividend year after year. In 2011, Buffett's company has received income of $376 million from their shares of Coke. Next year, it'll be larger, and the year after that, even bigger. Imagine making 40% interest on your money and then having those payments grow year after year.
What Tom is saying is that the wealthy understand that the key to building and sustaining wealth through the stock market is dividend growth. There are lots of companies that have an implied policy of growing their dividend payments every year. In fact, some companies have grown their dividends every single year for more than half a century.
And that's why a single $40 original share of Coca-Cola is now worth more than $5 million and pays out over $100,000 a year in dividends. And Coke isn't the only example. There are lots of companies that have increased their dividends for decades. Even during the last 10 years, which were difficult times for the markets, investors in Lowe's home improvement stores saw their dividends increase 1,766%. McDonald's investors are getting dividends that are 1,300% larger. Or consider Raven Industries, an American manufacturing company, and another major dividend grower. A $7,000 investment in Raven in 2000 would be worth over $240,000 today, and it would pay a 43% annual dividend on your initial investment. And the list goes on. Walmart is paying 508% more. Medtronic is paying 506% more. Paychex has increased payments 463%. Johnson & Johnson has quadrupled its dividend. And Pepsi is paying 3 times more than they were in 2000. And remember, dividends aren't taxed like regular income. That's one of the greatest advantages the wealthy have. They pay less taxes because so much of their income comes from investments rather than wages.
Bob, what Tom just described sounds like the secret to overcoming inflation and the aggressive taxations that Americans will continue to face in the years to come.
Well, that's one good method. In fact, many of these companies actually benefit from inflation. Or at the very least, they can pass along any cost increases to their consumers. History shows that over the long term, dividend growth companies are an even better hedge against inflation than gold and silver. Let me give you an example. As you recall, President Nixon took the United States off the international gold standard in 1971. Since that time, gold has increased from $35 to well over $1,600 an ounce. That's about a 4,500% return. But let's say you bought 100 shares of the tobacco company Philip Morris that same month and reinvested your dividends over the time. Your total investment would have been $6,700. And yet today, that small investment would be worth $6.1 million. That's more than a 90,000% gain. In fact, your dividends alone would be more than $380,000 just this year. Or consider Johnson & Johnson or Procter & Gamble. These two companies have handed investors nearly 11,000% on their money during this same time period. And these are not high-flying companies. They're stable dividend machines that return a growing stream of cash to their shareholders. And that's where the biggest returns come from over time.
Craig, could I jump in here?
Absolutely.
I totally agree with Bob's take. We also agree that every person who is viewing this presentation today should have some gold and silver in their possession as well as mining stocks. And the great news is you no longer have to make the choice between investing in precious metals and earning a substantial income to pay the bills. There are several ways to do it, and I cover everything in my middle-class survival package. In fact, there are certificates of deposit you can buy which provide upside exposure to precious metals along with a reliable income, and they are even FDIC insured. There is also an excellent fund called the Gabelli Global Gold and Natural Resources Trust, which holds a diversified group of precious metals and other natural resource stocks. And the monthly dividends add up to 11% a year. This is remarkable because most gold stocks pay very little in the way of dividends.
I wanted to remind you once again that inside Tom's book and DVD presentation, you will find up to 24 specific recommendations detailing how you can restore your retirement and generate income as high as 20% annually, starting right now. These recommendations are safe, and anyone can take advantage of them regardless of your investing experience or how much money you have currently. Simply click the button below this video if you'd like to claim one of the 1,000 packages we have today. Doing so will not interrupt this broadcast. Okay, Tom, obviously most of our viewers are going to learn all these income boosting strategies and specific picks, but let's cover some of the big concepts right now so they don't have to wait. How can our viewers generate significant cash immediately?
This is where certain income generating strategies and alternative assets come into play. And some of these opportunities are paying off like a broken slot machine right now. Here's one that most people don't know about. Now, I know I said earlier that you shouldn't go looking for the next Microsoft before it's the Microsoft we know. But that's because it's already a public company. The wealthiest investors have a chance to get into these opportunities before they're ever offered to the public. But the average investor never gets to see them. Opportunities like this go to private equity companies, investment banks, and venture capital firms. Can you imagine how much money you would have made if you could have invested in Google before it went public? But Google doesn't even pay a dividend. I can show you how to invest in these fast-growing private companies before they ever go public and collect sizable cash payouts every 90 days. And it doesn't matter how much money you have. This opportunity was created by Congress in 1980 because the government wanted to give smaller companies more access to capital. So they invented a class of corporations called business development companies, or BDCs, and gave them a huge advantage. They don't pay any income tax. That means they can be very generous with investors.
Well, so how does it work?
Well, the BDC either lends money to a company, buys an equity stake, or both. Then as the proceeds from these investments come in, the development company passes 90% onto their shareholders. All you have to do is buy the BDC, just like you would buy any stock. One of my favorite business development companies is Apollo Investment Corp. With positions in over 65 companies, it's been called the Berkshire Hathaway of BDCs, and it pays a dividend of almost 15%.
I know that you also recommend some ways to profit from real estate without being a landlord, but isn't real estate still a fairly risky place for your money?
Well, you do need to be careful. But despite the real estate crash, there are a number of real estate investment trusts, or REITs, that have had a banner decade. My favorite REITs right now invest in mortgages, which are guaranteed by U.S. government agencies and carry essentially zero credit risk. The business plans for these companies are very simple. They borrow at extremely low rates and then turn around and invest the proceeds at much higher rates. One of the safest and best managed of these companies is called Annaly. They've been paying a dividend of about 15% for years. But my favorite opportunity in real estate right now is one that I highlight in my book. It pays a secure 21% annual dividend.
That's phenomenal. 21% interest in a 0% world. Bob, you're down on real estate. You must not agree with Tom's take here.
Well, as I've said in previous interviews, the overall real estate market is going to be depressed. But that doesn't mean there won't be select opportunities that are quite lucrative. For example, I know that one company Tom recommends in his book owns property which it leases to hundreds of nursing homes and assisted living centers. With our aging population, those businesses are not going anywhere. They're going to keep paying their leases no matter what happens to the economy. Certain REITs also give you an opportunity for you to be the bank and generate income of 10% or even 20% on your money. And these companies will be in their sweet spot for at least 2 more years while Bernanke keeps interest rates at rock bottom levels. So it's an act now kind of opportunity.
Tom, in your DVD program, you talk about income generating strategies. Can you share one of those?
My favorite income generating strategy is especially profitable right now. In fact, this could make the dividend growth opportunity we talked about earlier even more lucrative because it's a way to pull a lot more income out of stocks than just their dividends. I'm talking about selling covered calls on your portfolio of stable dividend-paying stocks. That involves options for our viewers who aren't familiar with the term. This strategy can be much safer than just buying stocks, and you could easily generate annualized income of 15 to 20% even if these stocks go nowhere. And when the market is volatile like it is today, the money you can make goes through the roof. I'm talking about 4% to 6% per month. We don't have the time today to explain how this strategy works in detail, but viewers can find everything they need to get started immediately in both the book and the DVD.
Well, I love that this strategy can help reduce the risk of your portfolio and generate a much higher income. And I know it's easy to do, even for those who are brand new to investing. But what about those who are interested but might not feel comfortable with options?
That's no problem at all. In fact, you can get professional investors to do all the work for you. All you have to do is buy what's called a closed-end fund, like the BlackRock Enhanced Capital and Income Fund. This fund invests in some of the biggest, strongest dividend-paying companies in the world. Then they write covered calls on the positions to generate extra income. Right now, this fund pays an incredible 12.2% dividend. And of course, in the Middle Class Survival Package, I reveal 4 additional covered call funds, including one that has excellent global diversification and whose monthly payouts add up to 13.5% annually.
Tom, thank you for providing so many valuable ideas today. Between low interest rates, a weak stock market, and the falling dollar, the American people need a secure way to rebuild and get ahead. I know our viewers appreciate the specific recommendations you have provided, but I also know that we just scratched the surface of the profitable investments you've uncovered. Now that's why you've prepared some powerful research, and I know that Newsmax wants to put it in as many hands as possible. So why don't you tell us what's included in the Middle Class Survival Package?
Well, we call it the Middle Class Survival Package because Main Street America is in trouble. This vital segment of our economy is disappearing. The poor have a safety net from Uncle Sam, the rich have assets, but the middle class is on the ropes and they need help. I created this research to help our viewers quickly put thousands of extra dollars in their account month after month, plus the potential for several $100,000 added to their retirement down the road. The package includes my book, Powerful Secrets to Superior Returns, and a DVD I created called Fortified Income Strategies. And together they can lead you to a lifetime of work-free cash flow. My first goal is for you to generate growth and big income starting today. That's the right now part of the program, a stream of cash that you could start collecting immediately. But I also provide all the details you need to build a portfolio that could grow to hundreds of thousands of dollars or more and provide you with thousands of dollars in monthly income. In all, there are 24 different ways to secure high income in this package, along with full details about how each strategy operates, so even the most novice investor could put it all to work. And of course, I provide specific recommendations and all the details you need.
I know that Newsmax believes so strongly in your message and the opportunities you reveal that they're prepared to provide an entire package to the first 1,000 viewers who respond today. And I want to remind our viewers that all you have to do is click the button below this broadcast to claim your copy and take advantage of this offer. But it's a long-term process to reach the retirement of your dreams. And that's why Tom has also established an ongoing research service called the High Income Factor. Tom, why don't you tell our viewers a little more about that?
The High Income Factor is a printed newsletter that arrives in your mailbox every month. But I also send weekly updates and commentary on the markets by email, so you never have to wonder what to do next. I tell you what to buy, and when to sell to maximize your profits. My goal is for subscribers to begin generating aggressive high income right away. I'm talking about safe opportunities to make 10%, 15%, even 20% income on your money without touching the principal. These payments can start immediately. And as your streams of income grow, you can get paid as often as every 2 or 3 weeks. But I also provide ongoing recommendations for the absolute best long-term dividend growth opportunities. These are the companies that put the big gains in your account over time and could eventually add up to tens of thousands of dollars a month in income. In every issue of the High Income Factor, I spotlight the best and safest investments in the world to collect enormous cash payments today and over time.
What I like about your service is that you don't just focus on stocks. Can you discuss what other investments you target?
Absolutely. I also cover preferred shares, royalty trusts, bonds, utilities, closed-end funds, master limited partnerships, exchange-traded funds, high-yield CDs, covered calls. The High Income Factor covers every class of income investment that can provide aggressive cash payouts, including many safe, lucrative opportunities you probably never knew existed. And each one is easy to take advantage of, regardless of how much money or experience you have. I'll show you everything you need to know to make 3 times as much as most stocks, with less risk and practically no work at all.
Bob, what do you think about the High Income Factor?
I think every person, from experienced investors to those who have never invested on their own before, should consider joining the service. Very few people understand that even in the midst of all the turmoil in the world, there are some incredible opportunities to safely generate substantial income and growth. I believe that for those who are prepared and have an expert guide like Tom Hutchinson, right now is a great time to build wealth, no matter what happens in the economy or the stock market.
Now, I'd like to show our viewers how they can build the same kind of income portfolio that the very wealthy have used to grow even richer. I'd like to offer you a 100% risk-free charter membership to the High Income Factor. When you enroll today, you will receive 12 monthly issues of Tom's newsletter, delivered by mail and email, which highlight at least 2 secure income recommendations each month. And of course, Tom is going to walk with you every step of the way, so you'll never have to guess how long to hold a position or when it's a good time to buy more. Tom will also keep in touch with you through his weekly Wednesday update, with commentaries on the market and a review of the portfolio. You will also receive unlimited access to the High Income Factor website, where you'll find bonus reports, articles, exclusive videos, and ongoing support. Now, as soon as you become a member, your copy of the Middle Class Survival Package will be on the way to you in the mail. But Newsmax wants to ensure that you don't have to wait a single day to get started. As soon as you become a member, you will have immediate access to an instant income library, where you will find 3 valuable brand new reports with more than a dozen recommendations and the guidance you need to put these strategies in place today. First, you will find the powerful report, The Secret to Conquering the Commodities Boom. With the destruction of the dollar imminent, you have no choice but to protect your wealth by investing in hard assets. And in this report, you will discover 4 specific opportunities that will allow you to profit from the growth of precious metals, energy, and other natural resources, while also generating an extraordinary income as well. You will also receive the report, The New Golden Age of Dividends. Here you will discover why right now is the time to be on the hunt for dividends and why the opportunities today are better than ever. Of course, you will also receive several specific recommendations, including a company tied to the growth of electricity in one of the busiest economies of the world. This is a company which has increased its dividend 880% right through the financial crisis, and one your portfolio can't afford to be without. Finally, your instant income library also includes the report, 3 little-known income strategies to triple your return. Here you will discover 3 strategies that you can use to beat low interest rates, stay well ahead of the stock market, and protect your wealth from the dying dollar. And here's the best part of all. You will only be asked to pay a very modest fee for access to this powerful package. The average American has been through enough over the last decade, so you shouldn't have to dig deep into your pockets for the solution. Newsmax wants to ensure that there is no barrier to entry for anyone. We are prepared to immediately send you the entire Middle Class Survival Package, plus all 3 reports in the Instant Income Library and a full 12 months of Tom's High Income Factor newsletter. When the charter membership period expires, the full retail price will be just $99 for a 1-year membership. But if you are one of the first 1,000 to order today, Newsmax will take an additional 50% off the price. That means you can lock in your charter membership today for only $49. And finally, you deserve to be confident in knowing your hard-earned money will be well spent. So I'm happy to let you know that your High Income Factor membership is 100% risk-free. Feel free to take a full 90 days to review everything. By then, you could already be collecting enough income to pay for your membership many times over. And you will certainly have every confidence in Tom's ability to guide you through any coming fiscal storm that strikes America. But if you're not 100% satisfied, simply call, fax, email, or write us, and we will instantly refund every penny of your membership, no questions asked. You have everything to gain from taking advantage of this limited time opportunity and nothing to lose. Plus, we would also like to send you 2 surprise bonuses worth an additional $45, which you will discover when you click the button below. You just have to take the first step today. Again, I would like to thank Bob Wiedemer and Tom Hutchinson for contributing to this important discussion. But more importantly, I would like to thank you for joining us. This concludes our broadcast today. Until next time, I'm Craig Stepp. Here's looking to your financial future. Good day.